So yesterday I made $16,000 from trading Bitcoin. In this video, I'm gonna show you exactly how I did it and how you can do it and how I do this every single day and how right now is the best opportunity to start day trading Bitcoin. Let's jump straight in. All right. First of all, let's always start with the proof. All right. Here's the trade, $16,000 just here. Put up the P&L, as you can see. If this was fake, it couldn't have real funds. A demo account, I should say. Always look out for people that talk about that, show you results on demo accounts. If it was demo account, it's a demo here. You can't put real funds in a demo account and you can't create P&Ls. All right, cool. So get the skepticals out of the way. Now, guys, this method is so simple and it works so easy right now when there's so much volatility in the market. But it can go two ways. If you don't understand the strategy, you can be against it. And instead of making 16,000, you could be losing it, right? But in this video, I'm going to show you how you can be on the winning side. Okay. As you can see, guys, this blue triangle, this is my bullish fair value gap, all right? Let's show you what a bullish fair value gap actually is, okay? Because this is how I made $16,000 from a fair value gap. All right, see this candle? It's in the middle of these two candles, right? These two candles, wick does not meet in the middle, meaning this is an inefficiency in the market. Usually, this will get retested. So it will go up, then it will come back down at some point to retest it. And this one took days to retest, right? And to be honest, the longer it takes to retest, the more rebound you're going to get, all right? This yellow line here is something called a point of interest. Point of interest is when you go into like a higher time frame, you'll see many times, like I'll show you on the 5 minutes, I don't want to keep changing, but this will be on the 1 hour or 4 hours, and you'll see many times this candle will meet this line and it will react, it'll bounce off as it will bounce as support here and it will bounce there as resistance, all right? So this is a point of interest and it will go back for like months, okay? So why this whole method is genius, absolutely genius, and not much people talking about this. The market only moves for two reasons. The market moves to grab liquidity, okay? That's how the market makes money from your stop losses, okay? And to revisit inefficiencies. So point of interest is liquidity. Obviously, that's where I told you. That's a point of interest where there's a lot of buying and selling, meaning there's a lot of liquidity, right? And the fair value gap is an inefficiency. Market moves for two reasons, inefficient fair value gap. Now, how about, and I can't believe I've not seen no one talking about this, well, let's put them two together. Let's not get in a trade until I see a fair value gap and an inefficiency. Ooh, oh. All right, I told you the source. All right, there's a couple of little nuances which I'm not going to go through on this video, potentially next video. And you'll see there's reason other lines, right, which do help this method, but it's not the be and end all. You're getting most of the source anyway. So check this out. This was London session. New York session came in. It grabbed this bit of liquidity here, and it came down. You could even say this was part of manipulation to come down to grab all this liquidity down there, and now this is continuation. However, I don't care about the AMD theory. I don't care. I don't care about accumulation and manipulation distribution. I just care about when I seen a grab on liquidity and I seen a revisit in deficiency and I see a rejection, okay, or let's even better, change of market structure, because now you're going down. No, you're not. So it's change of market structure, right? Then I'll get in. So You may say, all right, Christian, but there's a fair value gap here. Why don't you get in here? All right, cool, John. To me, this is not discount. This is premium. So there's also a premium and discount theory, meaning I want to grab this on a premium because it's on a discount. The lower it goes is me getting a discount, because the lower it goes, the more it's going to shift, the higher it's going to shift on the market structure. The more liquidity grabs down here, the more liquidity it needs to grab up here. You get it? Because the market moves to grab liquidity. And if it goes down the lows to grab liquidity down here and it's done grab liquidity, then no, where's it going to go again? The market's not just going to go down forever. It's going to come back up to grab liquidity. Yes. You getting it? Very simple shit. All right. So now you might say, oh, how come you didn't get in here? Because this is risky, especially at the start of New York session, 9:30. You see a lot of manipulation. And how do I know that this was just distribution? You know what I mean? And it could be ranking going all the way down. So you see this, I was like, okay, cool. You took the liquidity here. Now you took liquidity here. You took liquidity here. You went through this fair value gap. So now it's the inverse fair value gap. So you disrespected it. So to me, it's bearish. And then I see this fair value gap, which also, if you really think about it, this holds a lot of weight, because I'm just, like I just said, it hasn't been revisited. So it holds a lot of weight. A lot of buy orders need to be grabbed down here, all right? So look, point of interest, then it's the fair value gap, and then it comes back up. Usually, I definitely don't get on the first kind of draw, because you'll see the market come back up, then it will trap all these people that would have longed the market up here, and the stop loss would have been down here. So they're trapping all these people that are longing for a lot. So I usually go on the second, and as long as the second attempt is lower than the first attempt, to me, that's very bullish. All right? Or drop down to the 1 minute, show you something else which I'll look out for as well. Another fair value gap. Yeah. Wait till you see a bullish fair value gap and a retest of the bullish fair value gap. Boom. Guys, I'm going to share something with you. People don't show you this shit. I'm giving this shit for absolutely free. All right? And even deeper, you know I only made $16,000 from this, right? From this. No, it's actually about here. That is it. Because end of the day, guys, you have to have a strategy. You have to stick to it. My strategy is 0.5% moves. But now I see the market in the last week, and obviously you got to adapt to the market. They're giving you bigger moves. So what I'm going to start doing is holding onto my position. Put my break even, put my stop loss at my break even, and letting this bitch roll. Look at this. That's $16,000. And I'm not saying coulda, woulda, shoulda. I don't do all that shit. But it's just chit chat. It's not that I care. Could have been oh shit. 6 times more, 5 times more. That could have been a $100,000 move. Straight out. And in my mind as well, look at this. Wallahi, this here, I did not put it there. I did not just put it there. That was from before. Right? I was looking at this zone here for a retest, where I said to you with that thingy, but that was like obviously discount, a premium, sorry. As soon as we went through there, then my next zone target was here, because this is my point of interest, and there was a fair value there. So my next target was here. So look how it just displays through. So it's not even like, oh yeah, well, you was wrong here. No, I was monitoring it. That's what I'm just saying. You don't have to get in anything. You monitor it. See how it displays through, right? And it just went right through. So then my next step was my discount. And that's where I got in, right? And then here was always my take profits, because this is a lot of liquidity here, because it had the London high. Think about all this other stuff, but London high was enough to say that's a lot of liquidity because look, it comes swoop this London low. Because also you got the London low, you got swing low, and there was a 7 a.m. low. It was so much liquidity down here. It was obvious. And when it come here, it was obvious it's going to come back up here. But it doesn't usually do that. But there's a lot of volatility in the market right now. So it did. All right, guys, I literally just gave you most of the source. Okay? If you want full coaching from me, signals, copy trading, check the links in the description, and I can help you out with that. Till next time, peace.